But Marico, let's bring on board the management then. Saugata Gupta, MD and CEO, joins us on the show right now. Saugata, very strong volume growth seen, fastest in the segment. Tell us what were the drivers.
See, if you really look at the volume growth this quarter, I think we have taken, it's been a reverse of a combination of reasons. One is we took proactive pricing calls where we passed on the benefit to the consumer when we got gains in commodity, especially in Parachute. In Saffola, which has been facing certain problems, we have a rejig of our strategy. In the value-added hair oils, we now have a broader participation play and some of the new innovations are playing across. So I think it's a combination of all these three things. And I think lastly, I think around 18 months ago, we started a journey of long-term transformation of the organization, which we identified 5 areas where we said that we want to bring long-term capability to become best in class in these. And I think some of the dividends are paying off. So I think it's a combination of all 4 rather than one single initiative. And I think we will strive to deliver 8 to 10% volume growth in the coming quarters if things continue to remain as it is.
Now, your brand Saffola has managed to regain quite a bit of momentum after a couple of soft quarters. Will this sustain?
So, okay, I mean, 16 may be a slightly tad higher, but I think what we have put a strategy in place to at least get a double-digit growth in Saffola. I think we have done 2 things. One is a much more broader massification of the TG. I think there are entry point variants which we have been advertising. We have taken some selective price calls in Saffola. So combination of these 2, I think, has paid dividends. Having said that, yes, I think there's been some shifting of the season. There's some base. So as I said, now whatever actions we have taken, we are confident of at least delivering a double-digit growth in the franchise in the next couple of quarters.
Right. What about Parachute hair oil? Because that growth has been a little benign despite the price cuts initiated by you. What were the reasons? What is the kind of volume growth that you're targeting going ahead?
Obviously, in a scenario of falling prices, there are issues where the trade, and the trade supply chain thins down because there's always an anticipation of falling prices. It's the reverse when the prices increase where the trade stocks up. So I think it will take time for the Parachute volumes to stabilize 1 or 2 quarters because of the fact that we are still in a scenario of falling prices and there could be some more pricing interventions. So we are not, I think, too worried about it because I think it's important to keep the supply chain thin when there is an issue of falling prices. Otherwise, you are stuck with old price stocks and the consumers won't be able to experience the new price. I think as long as the consumers get it on a fast track, the new prices and offtake happens, we are not particularly bothered about it.
And your margins, they've expanded because of the low copra prices. For how long will this sustain? And what is the call or outlook on your margins for the long term?
There has been a little increase in the margins. As an organization, we believe that we need to pass on a significant portion of the margin into pricing and A&P as long as it drives volume growth and market share. And I think, as I said, that as long as we maintain a threshold level of margins and maximize volume growth and market share, we are happy. And I think we would be taking pricing calls proactively either way. Such that we continue to ensure that while maintaining a threshold level of margins, we protect volume growth and market share. So the way to look at it is that, yes, I think the margin situation will be comfortable at least in the next couple of quarters because we expect input costs to be bearish. What is most important is how do we start to get this and maintain this volume growth level.
Right. Rural is now about 1/3 of your total sales. How did that part of the business pan out for you?
So we have grown around 6%. I think rural is a little soft, especially in some of the states where it has experienced 2 consecutive years of drought. Having said that, I don't think it has. So far, the mass FMCG has not been significantly impacted, while the growth rates have slowed down. We have to wait and watch, and I think what is important will be that how we use pricing as a strategy to drive affordability, especially when there are issues in some of the states. But we are, I think, we are waiting and watching. Having said that, I think, as I said, that while there has been a huge talk of a significant dent in rural consumption, while it is a little sluggish, we haven't seen that significant impact so far.
And finally, your international business was also very strong. However, the emerging market currency was a bit of a risk. So what's the LT run rate there?
Our international business was soft in the past couple of quarters, or I would say 7 to 8 quarters, because of our internal issues and nothing to do with the macro issue. Although yes, there is instability in some of the markets, and there has been some quarters of instability. Having said that, I think what we have been doing in the last couple of quarters, and this is going to pan out, is that we are investing behind organizational capability and executional excellence in international business, such that we continue to drive higher growths and find new engines of growth, whether it's organic, and now I think we are confident of driving inorganic. As regards currency risk is concerned, yes, the currency risk continues to exist, and I think what is very important is that you keep on de-risking the business from both geopolitical and currency risk in terms of the mix of the business is concerned.
Saugata, good chatting with you. Thanks much for taking the time out, and congrats once again on an excellent set of numbers. Adani Enterprises, meantime, has just come out with